This long-term uptrend momentum started in the 80s has ceased since the third week of 2022. And the landscape for passive investors in US equities have changed forever. I'm going to explain the reason why this is so and how we should re-strategize our investment. My name is Kon Hao. My work on this channel, as always, is to study into the correlation between the different markets and uncovering potential opportunities. And before we discuss about this topic, please do take some time to read into the disclaimer. The US equities, whether it is Nasdaq that we're going to study here today, or the Dow Jones or S&P, they are all giving us a very similar reading, which is they are all unsuitable for passive investors since the beginning of 2022 and onwards, and likely for many more years to come. Let me first define what is passive investment. It is first made famous by Warren Buffett. He says that if I like a stock, I would like to buy into it or invest into it and hold it forever. And this strategy, it was good in the 80s, in the 90s, in the crossover of millenniums, even after 2010. But the market dynamic have changed since at the beginning of 2022. And before 2022, my strategy for the US market is also to buy and hold for investment, for long-term hold, and to buy into dips for my trading position. But since after the third week of 2022, my strategy have changed from a long-term hold to just to trade into the US market. And this is what I mean here. Since the third week of 2022, the market indeed has been very volatile, which is good for traders. And I would recommend that you refer to my previous videos to understand how to draw into a classic uptrend line or classic downtrend line. And what I'm going to explain to you is the fundamental reason of all these swing. And we're seeing that onto the fourth quarter of 2023, the market seems to have crossed below this uptrend line. And I believe that there's more downside to come. Why in the third week of 2022, market transit from a long-term uptrend to a volatile market? It was because of the inflation. Since the 80s, 90s, or the last 40 years, the inflation or the CPI has been at around 2%. But something have changed since after 2021. We could see that is whether it's in US or Europe or UK, the inflation seems to be a little bit out of control. It have broke above 4% and trend up since after 2021. And I observed that for the fundamental reason is just waiting for the technical reason to get into trading mode from a long-term hold to trading into the US market. And we could see that weeks later or some months later, because of this fundamental reason, on the third week of 2022, it finally broke below this uptrend line. And that's where I get into a trading mode. Now, basically for trading mode is that we have to recognize where is the mid-term direction. If the mid-term direction is moving down, I will tend to sell into strength. Crossing over to the fourth week of 2023, many of us attribute this rally to AI rally, which is only partially true. And the reason for this rally is because of the taming of inflation. And we have to understand that since June 2022, the inflation peaked at 9.1% for US. And since about then, until the end of 2022, which is in December in 2022, I could see that the inflation is coming off, but not for the equities market. It didn't go up yet. And I was timing that when it crossed above this classic downtrend line, I would know what to do. And I know that for at least for the first or second quarter, but market is so good, it gave me into the third quarter, it went into a short-term bull. And basically, I've been buying on dips. And what happened to the fourth quarter of 2023, technically, we saw that it broke below this downtrend line. And I'm ready to get into this mode of selling into strength. But the fundamental reason is because of the yield. For the first time, it became so obvious that it's much higher. And we have to understand that interest rate is determined by the central bank, whereas yield is determined by the free market. And this is something that we should be concerned about. And again, in the recognizing the short-term or mid-term trend, if it is downtrend, what I would do is I will get into a shorter term picture like this. On the daily chart, I will start plotting this downtrend line like this. And on the next move, what I do is that since market seems to be coming down, I would prefer to sell in the strength when the time is right. With this change in the market dynamic, we should not remain passive, but be proactive, be sensitive to each significant move of the market. The market are always telling us on their next move. Join us in our weekly case study and discussion. Click on my profile icon to find out more. Feel free to leave any comments below. I love to exchange ideas with you. Really happy that you stay through this tutorial. You have many great trading weeks ahead.